The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials down 236, Nasdaq down 70, S&P's down 24, gold contract up $4.70, trading at $12.46 an ounce. You get silver up 5 cents, $14.69 an ounce. Light sweet crude flat, $51.22 a barrel. Notes and bonds, you get the 10-year note up 7 ticks, 120.20. 30-year bond up 14, 143.05. King dollar down 250 ticks, trading 96.660. The euro is at 113 to 1 US dollar. The yen is at 112 to 1 US dollar. The pound is at 126 to 1 US dollar. Tom O'Brien, what's going on?
Good Monday morning. How we doing, man?
Well, it looks like this good old February high volume low. I mean, it's a magnet pulling it right down into it, man.
It's pretty remarkable, man, right? We start off down 1% again, for sure.
Yeah, and what you have out here, folks, is that, so this is the last full week of trading. What you also have here is that you have all the indices right now, meaning the Dow is down 3% for the year. The Nasdaq is down 0.5%. The S&Ps are down 3.5%. And it's going to be really tough, folks. Yeah, let me get the charts up. Sorry about that. It's going to be really tough for the market bottom line to get out of this before the end of the year. Now, what we do have, who could be the savior for at least a bounce, not a savior in the context of kind of much higher, but we'll see what the Fed has to say on Wednesday. You know, that's going to,
yes.
You know, that's, I mean, I think the market, folks, is expecting, you know, status quo, meaning you go up a quarter point. That being said, you know, if we bring these Fed fund futures up, you know, we're not over, well, it was 37% this morning. Now we're not over 35.7. You know, it's
pretty remarkable how quickly those have changed, right? And they do move quick. I know you had in your gold report, of course, today.
Yes.
But yeah, it's just crazy, man. I mean, 2009, yeah, Wednesday seems like it's coming, but just remarkable. I mean, we were talking about whether it was going to be 3 rate hikes or 4. Then it was like, okay, it's going to be 3.
Yep.
Now it's like, do you think they'll hike it all in 2019? And that's a crazy difference.
It is. It's pretty intense. There's no doubt. Yeah. And you know, this is where the aspect, folks, is that when you get, well, here, I'll show you something. This is pretty cool. So watch this. This is, where is this? Okay, I'll bring this up in the aspect. Let me find the bond market for a second, because Stanley Druckenhauser.
Yeah, Druckenmeier.
Druckenmeier, thank you. He came out this morning with a editorial in the Wall Street Journal that the Fed should basically slow down. Now, what's so dramatic about that, folks, is that only in September, I got to find this because when you see how quick he changed, but in September, this is what he was saying in September. He was saying in September that he thought the Fed should continue until there is disruption inside the marketplace. So now what he's saying is that, yeah, he's saying, okay, you got the disruption.
I was going to say, we're at disruption, right? Yeah.
Yeah, and he's saying, okay, you have the disruption now. Now you got to slow down. So it was pretty wild, man. I mean, yeah. But I think he's right. I mean, you know, you know, and that's where the aspect is that, you know, the Fed can continue to say that no matter what happens with the marketplace, they're not paying attention. Well, they're paying attention. Yeah, they got to pay attention.
And just he was a former member of the Fed board.
Well, yeah, that's Walsh. That's the other guy. He wrote it with Kevin Walsh. Kevin Walsh was a Fed governor.
Oh, okay. Is that what I'm jumping around?
No, but they both wrote it. They both. Stanley is he's a big hedge fund guy. Still is.
So what I had read, just so it says Druckenmiller, a former member of the Fed board and now CEO of the family office. So he may have been there as well.
Oh, interesting. Okay.
Yeah.
Okay.
Yeah.
Yeah. So the bottom line is that there's going to be pressure out here, and I suspect what we're going to have, it's going to be in that statement. Whatever's in that statement, that's going to be the number. You know.
Definitely.
And
right. Yeah.
and you know, if we take a look at the dollar, you know, there was not conviction taken out this high last week, and what we had is that it not only, well, it came back inside. It failed the high. Now we'll see if it got any juice on the way down. Right now, this morning, you know, it started out with volume. Like at 6 o'clock this morning, it had about 5,000 contracts. So this volume is dying on the vine up here. Like there's no more sellers inside the dollar right now, because at the you know, when I first got up, it was like, okay, man, you know, that first leg down, you know, bottom line is that you had some action here. You can see that, yeah, it was at 5 o'clock this morning. At 5 o'clock this morning, you had some action, and then, you know, at 7, you get a little bit more, but this thing is slowing down right now pretty dramatically. And what it's doing, it's going into the strength that it had last Thursday. That's what stopped it like on a dime at 96, 630. You know, we went to 96, 580, but you can see if you're watching Tiger TV, you know, we came right into, you know, there's a bar there with 948 contracts, and you come into that bar with 505. It's not enough to break it down. So.
And as you kicked off the show, you're definitely right. You know, this is the last full week of trading. Friday's December 21st. You have Christmas being a week from tomorrow.
Yeah.
So next Monday is Christmas Eve.
Yes.
And just kind of what I'm getting at is I have friends traveling, and just talking to them, they're all traveling this weekend.
Right.
You know, because Monday's Christmas Eve, so you're not going to wait for the weekend. So if you're traveling this weekend. If you're traveling this weekend, that means you're kind of getting ready on Thursday or Friday, right? Your brain's kind of going to check out towards the end of the week if you're making travels on the weekend. And, you know, so I agree that come Thursday, even Friday, we'll see what happens. But because of the way Christmas Eve falling on Monday, everyone traveling over the weekend, you could see, you know, Thursday, Friday, the holidays kind of begin. And then, you know, next week, with Christmas on Tuesday is kind of, you know, the markets will be open, you know, but
Thursday,
not many people.
Thursday, Friday, you might get something. I agree. I mean, Mondays, the markets might as well close.
I agree. Right.
Seriously, man. Do you know what I mean?
Who's going to be a Scrooge on Christmas Eve? Come on, man.
Yeah.
Let's go, right?
Not even close. Our phone number is 877-927-6648. Let's go take a look at some of the higher volume equities out here. Inside the S&P, you get Advanced Micro is down 42 cents. Johnson & Johnson, that Johnson & Johnson. Let's go to J&J for a second. So
what are they doing today?
Yeah. They're lower. I mean, you know, bottom line is that, you know, when we first got on the air on Friday, folks, they were down $8.45. They ended up being down 15 bucks. Bottom line is that, they got a scandal on their hands extraordinaire. Baby powder with asbestos.
Yeah.
Okay.
It was interesting to see some of the analysts talk about how the pullback wasn't extended. It doesn't really change their core business. They may be right. We talk about it all the time that this stuff is built into it, right? You have the financial companies that have huge, whether it's, you know, just scandal after scandal, and they're fine. But I was at the store this weekend. I was buying face wash, and I was aware of it. And I was saying, man, I got to figure out all those brands because
you're not going to trust them.
I don't want to buy them.
No,
you know, I mean, that's just pretty atrocious. Yeah.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's down 150. Nasdaq's off 38. S&P's down 17. We'll come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow down 159, Nasdaq off 43, S&P's off 18, and good old Goldman. So let's go. We were just talking about Johnson & Johnson, talking about the banks and scandals. Well, Goldman Sachs has an all-time low for the year right now. 168 it hit today, 275 was the high for the year. So you talk about a little spread here, and if we just take a look at it technically, what you're going to see here is that as I bring this back, you know, you have a total failure from where we had gone topside in November of 2016. That sets up that bottom line is that the 138 is game. And what this is all about, well, this is all about selling, number one. But this is going to get pretty intense because I don't actually remember, I don't believe that any bank got charged criminally in the U.S. for the downdraft and the amount of frauds that took place in 2007, 2008.
Yeah, criminally is a different deal versus
different ball game.
Civilly, right? Yeah.
And Malaysia, folks, bottom line, just whipped out the first criminal charge for the 1MDB scandal. Now, what this is all about is that, you know, so Malaysia turned up the heat on Goldman, filing the first criminal charge against the U.S. bank in relationship to the 1MB scandal. Authorities allege that Goldman misled investors when the bank knew that the proceeds from the 1MB bond sale it had arranged would be misappropriated. The government is seeking fines well in excess of both the $2.7 billion of the alleged misused funds and the $600 million in fees that Goldman had received on the deals. Goldman is blaming rogue employees for any wrongdoing in relationship to the 1MBD, a state-owned investment company. The problem with that, folks, is that Goldman raised $6.5 billion. Their problem is going to be that their biggest guy, the biggest guy in Malaysia, Tim Lissner, who was the former deputy, has already pled guilty to U.S. bribery charges. And what you're going to see inside of this also, that they already have a documented meeting between him, the actual, I forget the guy's name that was running 1MB, and Blankfield.
Yeah, that's what I was waiting to see if you brought that.
Right.
Yeah, and that was So they have Lloyd Blankfein attending a 2009 meeting with the Malaysian financier.
Yeah.
Low Take Joe, maybe, and an associate, and those are the guys accused of laundering billions of dollars. And there were two guys that were criminally charged along with Goldman. It was Leisner, like you were saying, and Roger Ng, maybe, two guys, two Goldman employees.
Yeah. So what you know what's not in here? Now this is where it's going to be a trip, folks. What's not in here, which will end up being in here, is they're sticking with the aspect that, you know, Goldman raised this money through bonds, and they're saying, okay, it was raised because they knew that it wasn't going to be used for basically what it should have been used for. Well, you know, well, I suspect it's going to happen here. This guy, folks, bought everything, and I'm talking about buildings, yachts, all of this. Well, guess what? I bet when we start digging into it, you're going to see, or they start digging into it, you're going to see the aspect of that. What were the fees to the bank, and was the bank involved on the other side of that? Because he was buying buildings at $400 million. Do you know what I'm saying? It's like, okay, who's setting that up, and who got the bread out of where all those funds went to? You know, so bottom line is that they have problems in paradise, and you know, we'll see if anyone comes down the pike. But you know, the banking structure in general. If I switch gears here and go to the XLF, what you're going to see is that the bottom line is that the XLF also hasn't been able to hold this February low. You know, we're 2 points below it right now, $2.50 below it, and that's a problem. You know, we'll see how this shakes out, but it's a big number, man. It is definitely a big number. Some of the other commodities out here, if we just take a look at the commodity in general, look at natural gas, man. Natural gas is something else, man. So
it sure is, man.
Isn't it?
For it, yeah.
So natural gas this morning, folks, is down 4%. It's at 366. Let's just look at this for a second, because look at that, man. You talk about a move. So natural gas, November 14th was $4.90, and it's 360. So this is pretty cool, actually. This is actually coming right back to where it broke out from. So this could be a little field day. And if you trade natural gas, make sure you trade it in, you know, a basically defined risk, because
you better, man.
Yeah,
right?
This is like insanity.
It is.
Yeah, I mean, the way this is trading now is it can go fill that gap at 333. No reason it can't. It's like, okay.
333. That. We'll be there by the end of the show, man.
Yeah,
right?
I know.
I mean, see, just in the last 3 days, we've gone from what, like 430 down to 360. So you're talking about 70-cent move.
Right.
I mean, amazing.
70 cents is $7,000 per contract, which is just.
Is it?
Yeah.
10,000 per a one?
Yeah, 10,000 a point.
Perfect. Yeah.
Yep.
Crazy.
You got it up to 6,200. 6,270 right now is the aspect of what you'd basically put up for margin. And if you remember when, before this broke topside, folks, that was down to like 2,300. I was surprised the first couple of days that they didn't move it. Well,
it was.
Yeah.
It was pretty crazy. Yeah. And to put, I mean, that would mean that you only need 23 cents of movement in a day to lose your entire investment. So obviously that's not enough capital to put up. And 70 cents even, yeah, I guess that's probably appropriate. But if you asked me if it could move 70 cents in a day, I'd say yes, there's a possibility for sure. So.
That'll start. Well, it has to get another spike higher, but that'll keep. I suspect. Give it another 60 days. That thing will be up to $10,000 again, because that's where it basically was for a long period of time.
If it stays like it's moving like this, it definitely will, right?
Yeah,
for sure.
Totally.
Yeah.
Let's go over and take a look at Apple. So basically, Apple been pushing into this low. The low out here is that 163. Now, if I bring this back. Yeah, see, this thing is still. So watch it with Apple, folks. Apple, big volume last week. So we had 217 million going into 164, going into 252. So that basically, Apple got saved at really at the 160, 63, 64 area. That being said, this 163 to 150's game on Apple. This has been a one-way trip on Apple, man. It was a one-way trip on the way up. Consolidated a bit, but since October, that's not that long, man. It's actually kind of wild. October was 233. You hit 165 this morning. These are big numbers, man, on these
huge, man.
high.
Huge.
Yeah, I mean, it's almost hard to comprehend.
No, I agree. I know.
Yeah.
You almost forget how fast and how far Apple has fallen when you talk about, almost 30%, 25% haircut in no time.
In 12 weeks.
Yeah.
877-927-6648. We have the Dow down 168. Nasdaq is off 35. S&P's is 17, down 17. Tommy and I come right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And so I guess since we're talking about scandals on this Monday morning, folks, okay, this is kind of getting bizarre. I mean, there's, these companies in general, we're used to it, I guess, in the banking business. Now we're going to go over to the PG&E, and this is the big utility in California. And, when the fires are taking place, it's like, okay, you have huge utilities in the middle of basically the desert. So I can really kind of understand how transformers can blow up, really, okay? That being said, well, guess what? So you get it down $1.50 today. Now, you remember when this fire started, it was at $49, goes down to 17. When we bring this back, what you're going to see is that this was just the second deal, because this stock has actually gone from $71 down to 24. Now, what has happened, however, is that what this is about this morning is that they're being accused by the regulators that they faked location records for pipes. Let's see what they say. Shares of PG&E, of course, are already in the scrutiny for the deadly California wildfires. The California Public Utilities Commission said Friday that the state's biggest utility owner systematically violated rules to prevent construction crews from accidentally damaging pipelines during evacuations.
Yeah, excavations. Yeah.
Thank you. Okay, so to prevent.
So it's two parts of it there.
Okay.
It's that they number one were doing that, but then the next paragraph, the next sentence there is that they also allegedly falsified records for locating and marking pipes from 2012 to 2017. So utility falsification of safety-related records is a serious violation, obviously, right? Especially in light of what's incurred in terms of the last. And I think it just speaks to whether you can trust them, and if they have that kind of stuff going on.
Yeah, what else?
You know, and I agree with you. Like, if there's a transformer that blows, and if they're doing their due diligence,
right,
and that's what's going to come to light. And I think the market's saying, hold on a second, if they're falsifying all these records, then maybe they're not doing their due diligence.
Exactly.
And then that's when they will be, because there's actually a huge difference with so as part of the last fires that came about, I think California regulators passed laws allowing PG&E to issue bonds that would be paid by, whether it was customers or taxpayers, I forget what it is, but they'd be able to issue bonds only if it was shown that that type of thing, whether it was a transformer blowing or something, was kind of out of their realm, right? Where it wasn't a result of their negligence. So that's the real question. Even if it was somehow caused by a transformer blowing, was it because they had done something that was causing that, or was it something that was out of their control?
Right.
So that's really the big question.
Amazing, man. You know,
it is. It is. I mean, that's bad news, man. When you see that type of stuff, and it's pretty much scandal across the board, man. We're jumping from 1, 2 to 3. I know.
Isn't that crazy? I know. Let's go to something. Let's go to something good right now. We'll go to the GDX. So the GDX, folks. Bottom line is that we're at 2034. You did push higher last week, and you get some juice behind this move. So I suspect Wednesday, once again, is going to be the number inside the, this metal market. And as as our man, Mr. Dave White, is saying, what is going to be pretty intense out here is this coming Friday, folks, because we have option expiration. But if you're listening to Dave and I Friday, and what Dave was bringing up is that this is going to be one of the largest rebalancing acts inside the NDX 100 this coming Friday. It's not a normal one. It's one of the biggest ones that has been going out there in 9 years. So it is no doubt a big one. We get a couple tigers looking for what inside the GDX, what the holdings are, and the percentages. And what we have out here, folks, Newmont Mining is 10.6%. You get Barrick 9.5%. Now, what you want to do here, and this is what's going to be kind of interesting here, because Barrick has been the strongest stock inside here, Rheingold right with it. Bottom line, because they're taking over Rheingold at 6.128 shares of Barrick equals 1 Rheingold, you're going to see Barrick is 9.5%, Rheingold is 5%. You can just add those together, so you get 14.5%. So that's a big number. Franco-Nevada, now this is what's pretty cool here. Franco-Nevada also, folks, let me show you this, is 8%. And Franco-Nevada has been the strongest gold stock, is basically, I think, 16 points off its all-time high. Yeah, $86. Now, this is a big number. The reason being is that with gold not reaching all-time highs, not even close to it, actually, on the run up in 2017, Franco-Nevada hit an all-time high. That's, if you happen to be in the metals market, that's a big number. Not that it hit the all-time high, but it's as how Franco-Nevada is trading right now, because it's still showing that it does have strength. If we move on, You got an Eco Eagle is 5.4%. Newcrest Mining. Newcrest, folks, is out of Australia. That's why you don't basically hear about it a lot. 6.8. You get Wheaton Precious Metals at 4.7. Gold Corp 4.7. Royal Gold at 3. Royal Gold is still struggling. Kirkland Gold isn't. Kirkland Gold is almost at all-time highs. Now, if you want to see something that's pretty wild, is that Wheaton River. Well, it's not. It used to be Wheaton River. Wheaton Precious Metals. You want to see something that went their way? Well, last Friday they got a Christmas present from the Canadian government. You can see Wheaton had closed at $16.45 on Thursday. Friday it opens at $19. And what that's all about, folks, is that Wheaton International was going to get nailed. In fact, all international earnings were going to get nailed up in Canada. And bottom line is that they changed their mind. They gave them a Christmas present in a big way because they just basically, this is over $500 million, and now they're not going to have to basically, they saved $500 million, man.
I read that in your gold report this morning, and my eyes opened up a bit.
Isn't it wild, man? I mean, it's like that is one big number, okay?
It is, man.
You know, so watch this. It went from 500 million. See, this went down to 30. It's like, okay, now we're talking. You know what I mean? Different ball game. Let's go take JUNG for one of the Tigers. Let's see. I know no. Oh, it must be JNUG. I bet. One second. Hold on. Let me see this. Yeah, it's JNUG. Okay, that's JNUG. Okay, so JNUG, folks, we just did the GDX. So the JNUG is the direction 300% of the junior miners. The low for the year out here is $6.13. The high's 20. You're at 770. Now this is not bad, but it's not great. And I think what you have here inside this JNUG, let me see this for a second. What's happening in the metals market is this: these silver stocks are not performing, man. They're just not performing. Yeah, it seems McEwen's not performing. That big short position has been successful. You get Mag Silver. Mag Silver. I hadn't looked at that for a while. That normally is a pretty good performer, though. Mag Silver, low for the year. Yeah, it's close to the low. No, the 612. The high's 12. Yeah. So the silver stocks, you know, basically still lagging in a big way, folks. So if you're going for something, I would be leveraging up the GDX doubles and triples versus the silver ones. Stay right there, folks. Tommy and I are coming right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now down 140. You get the Nasdaq off 26. S&Ps are down 13. And, you know, we were just talking about the XLF and the financials in general. And this is where, you know, it's the chicken or the egg, because what just came out, Tom, is the amount of funds that got pulled. Watch this. I'll put this over. Out of the XLF. Now, this is the largest largest takeout from 2008, so it's pretty intense. So what they're saying here is State Street's XLF had $1.8 billion in outflows just last week. The $24 billion financial select sector, which is the XLF, had $1.8 billion of outflows last week, the most since July of 2008. The $24 billion fund has seen investors pull $4.6 billion this year, fourth among the most non-levered U.S. equity exchange-traded funds. And what happens here, folks, is that and this is always in a downdraft or an updraft, either one, but a downdraft, it seems that I guess it would have to be the same, is that if someone sells Goldman, then what happens, folks, is that inside the, well, here, let's pull it up so we can see, and we'll do the holdings inside this so you can see how this works also. So
yeah, momentum goes both ways, right? Go for it. It really does, though.
It does. And what you have here is that, you know, Berkshire Hathaway is the highest weighting structure, 13.5%. J.P. Morgan's 11.7%. Bank of America 7.9%. But what happens in general is that Goldman is 2.1. So Goldman's not even a huge amount, but they've been selling all the banks. Now, as they sell all the banks, what ends up happening is that the XLF has to sell. As the XLF sells, guess what? They sell all the banks. And this is what's so intense about the ETF business in general. So it's great when it's going up, and it's a disaster when it's going down, you know, because of how this is shaked out. So if we go over to Berkshire, let's just go over to the highest weighting structure. The low for the year in Berkshire is 184. The high is 224. And what you're going to see is that Berkshire is not in that bad a shape compared to the other financials. You know, it's, you know, the high volume low is 189 and, you know, 199. Yeah, but you can see it's been a consolidation for a long period of time. Now watch the next weighting structure, though, which is J.P. Morgan. You're going to see J.P. Morgan, well, it's the all-time, you know, a year low for the year right now, today, $99. The high's 119. Now, this one has not been holding its high volume low. That's 103, and you're 99. That's a big problem, man, you know? So it's going to be, you know, this week's going to be really important, you know, because what we have, you have the aspect of the Fed, of course, on Wednesday, option expiration on Friday, rebalance it inside the NDX on Friday, and the end of full year on Friday almost, you know? So it's like, what are people going to do? You know, where are they going to go?
No, if you're making a plan for end of the year, right? Like if you want to close out a position, whether it's for tax losses, tax gains, I mean, there's almost no reason to wait until after this week.
No. And if you want to see something bizarre, how this always happens, folks, you'll see that Goldman come out this morning and said that people better start getting defensive.
Yeah, I saw that as well. Yeah, you better choose your stocks wisely, they said.
Yeah, guess what, folks? Hopefully you got defensive before we are where we are, you know. I mean, that's kind of...
Especially if you're a Goldman owner. Jeez.
Yeah, slightly,
Yeah.
you know. So let's go look at Bank of America, BAC. So Bank of America, that's at 24.64. Yeah, oh, this is really below it. Look at that. 29 was the high volume low on that. Yeah,
Wow,
see,
yeah.
this market, this is going to get dangerous, man. You know, and what I mean specifically, folks, is that just the banking structure alone being that far into that low, that's not good. And what is different this time, I can tell you this, though, is that normally when you get downdrafts like this, the banking sector is normally last. What I mean is that you have one sector fall apart, you get another sector fall apart, and even in the downdraft of 2007, 2008, even though it was the banks that basically were the biggest fraudulent deals out there, they were the last to fall apart. But when they fell apart, man, they just got blown apart, you know?
And we'll see what happens Wednesday, right, with the statement, because the banks will have some volatility for sure.
Oh, yeah. Oh, yeah.
Hey,
So,
how about Bitcoin? I was
just going to bring it up.
You know are you watching the YouTube comments? No?
No.
So here's what's so funny. I was just going to jump to it, and who do we have asking about Bitcoin? Right as our man Paul is in there on the YouTube comments saying, do you take a look at Bitcoin? So let's take a look at Bitcoin. We all want to take a look at it. Perfect.
So,
quite a little bounce.
So Friday we hit a low of 31.36, and today we went from 31.83, and we're at 30. Well, we went to 34.39, and we're at 33.91 right now.
I mean, percentage-wise, that's huge. It seems like nothing because we've just fallen from 20,000, not to chuckle, and it is nothing if you've ridden any of those losses. But quite a little bounce.
Oh, yeah.
Percentage-wise, you know, we'll see if it can hold anything more than just today, though, right? That's really what, as I saw it.
Yeah, and you know, we were talking with Paul on Friday, and you know, I think he was looking to bite, and maybe he did. I'd still be really careful, man. You know, my take is that this is not that it's got lower price. Oh, listen to this. Oh, this is a riot. Remember we were telling the story about the guy that I know that has the pizza places in Puerto Rico, right?
Yes. Yes.
Well, when we left here Friday, Bessman and I saw him Friday night. I saw him Friday right after the show. So I'm not going to be able to have an answer for you, Paul and folks, until after Christmas, because he's going home first, and then he told me he's going to be going down there, I think, the second week of January.
Perfect.
Yeah, I know.
2019 update. Perfect.
Because what had happened...
God knows where Bitcoin will be by then, but we'll see.
Well, you know what was so cool, too, Tom and folks, is that he's in the pizza business. He doesn't follow Bitcoin, but I knew that last time we had talked, Bitcoin was at 6,000. So he said to me, what's it at? I says, 3,300. He says, oh, I can't wait to see what they're saying, too. But you know what he said? You know what he said to me, though? These are the guys that actually bought Bitcoin at... He was talking about 16 cents, $3, $6. That's, you know what I mean? So it's like, okay, you know. But even so, guess what? You get cut in half like that. That's like, okay, man, that's...
Yeah. Hopefully some of them had the wits to, you know, if you're buying Bitcoin at $1, $5, $10, even $200, man, like, you know, I hope you got out when it was at 5,000, 6,000. I mean, really, when it was hanging at 6,000 for a long time, that's the time that you really had to make a decision, I think. If not way before then, right? But at least at that level, because like we see, we're down, you know, 50% haircut again, and who's to say it's not another 50%?
Yeah, it all, to me, it would all depend on had they been in a market before. Because I've been in a situation that, you know, you have a stock. You know, let's say you buy a stock at $5. Okay, it goes up to 20, and then it comes back to 10, and you think that, oh no, this is terrible. You know, I'm not going to sell it. And then it goes to 5. It's like, really? Why did it sell at 10? It's like,
so true. It's crazy. It is. But
stay right there. Tommy and I are coming right back. Dow's down 150. Nasdaq's off 32. S&Ps are down 15. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials down 166. You got the Nasdaq off 30. S&Ps are down 15.5. If we take a look at percentage-wise out here, folks, that's approximately 0.4% down in the Nasdaq, 0.7 in the Dow, 0.8 in the S&Ps. And what we do have here for the year is that you got the Dow and the S&P down 3 and 3.3. Nasdaq, bottom line, is just about flat. So.
Pretty remarkable. Now, every index, though, year to date on the right there is in the red. I mean, I'm talking about whether it's Europe, Asia, everything. We were the only ones kind of holding out hope for green, but NASDAQ seems like the only one that even has a shot unless we get quite a boost in the final week or two of the year.
It's so true. And what happens, and this is the big heads up, folks, we're in a one-world market. And let me tell you something. When you look at the FTSE's down 17.7% for the year. CAT is down 14. The DAX is down 21. The DAX, when you look at the size of the companies, is the closest to the Dow Industrials. That's basically how the DAX is.
Germany has quite an economy, right?
Oh,
I mean,
my
for
God.
sure, right?
Huge.
Yeah, and to be down 22%.
Strong,
huge,
strong.
Right?
I mean, you're talking about big companies, man.
Yeah, was strong. Not this year, I guess. But
no.
Yeah, no, I kid. No, it's serious, though, yeah.
Sell down's dramatic, you know. 13,000.
Man, oh, man.
13,560. You know, with 10,761. In fact, let me do this.
And what's even more, I was just going to say, we had quite a 2017, but we wiped out all of those gains, plus some, it seems.
You're back to January of 2015.
Crazy, man.
That's where it is.
That's 4 years. We're coming into January of 19. 4 years gone.
Yeah.
Yeah.
Big time. It's a big heads up. There's no doubt about it. And we'll see, where this shakes out. Stay right there, folks. We got Fast Market coming up next. Then we're going to have our man, Mr. Basil Chapman. Steve is a little under the weather today. Our man, Mr. Dave White. And I'll be back this afternoon. Thanks, pal.
Thanks, man.
Stay right there, folks. Fast Market coming right up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.